Welcome to the Market Mindset. We are the hub for news, results, and CEO interviews focusing the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns. If that sounds like something you're interested in, you can help support us by liking this video, subscribing to our channel, and clicking the notification bell. For more info, you can visit our website. All links are in the description below. Now let's get into today's video.
Good morning, everyone. It's Andrew with the Market Mindset. It's always a pleasure to catch up with Gianni Kovacevic. We're going to talk about Faraday Copper, and we're also going to talk about LithiumBank, partly because they're kind of the theme is the same, and also the opportunity there. I guess one could say is almost the same as well because they are asymmetric opportunities, I would say. Lots happening in the market. Both in mining, in lithium, and in copper, but also more importantly, the opportunity that lies for the future where we can bring us forward to this green revolution. Gianni, how are you doing today? I know it's an intense time, it's a crazy time in the world, but tell me what's going on.
Well, it's going very well. I guess we're in the throes of summer now. Canada Day coming up, the July 4th weekend is coming up, and sentiment is so bad. It's so low. John Wayne used to say that, it's lower than a snake's belly in a wagon wheel rut. And we follow, me and some of my friends that follow this stuff a little more carefully, a lot of different metrics, but one you look at is the velocity of money. So we're talking about junior mining. We're talking about the Toronto Stock Exchange venture. Everyone can go right now and they can, at their own leisure, look at the volumes. They fell off a cliff one day to the next in April, and they fell. If you look at the overall volumes, it peaks were like 250 million, went down to 120, 100, 80, 90, went to 40 overnight. And the real low in the middle of May went down to 15. I mean, imagine that. So we're 8% of the peak.
Yeah.
No one has confidence to allocate capital. And so we saw a little bit of an uptick in that volume. And that's when the market really came off, went from 730 down into the 600s here on the TSX.V. That's one more little phase of capitulation. And then the copper prices come off now and the confidence is really shaken. So where do we go from here? Is there opportunity? There's always opportunity. You look what happened in Alberta last week. E3 has this big deal with Imperial Oil, and it's, I would say, some vindication, it's some verification. It gives a lot of confidence. And of course, E3 stock almost doubled in a matter of 3 or 4 days within this backdrop of really, really terrible environment. LithiumBank, as people know from the first couple of interviews, is an Alberta focus, over 3 million acres, multiple projects. And our Boardwalk project that's moving towards its initial PEA, preliminary economic assessment, which is being completed by Hatch Engineering, a premier engineering firm in Canada. This thing is going to be delivered this summer, looking at the various nuances of the project. But why am I rambling on about this? I'm rambling on because LithiumBank has 37 million shares outstanding, trading at 80 cents. After we deliver this PEA, a resource and another project, we're still going to have $5 million in cash, low share count. Our share didn't trade. You would think under normal circumstances, the similarities of projects like this, of closeology, usually you close the gap. That didn't happen. I'm going to submit to people that this is a disconnect in the market. And I believe that when we deliver this PEA, there's going to be a lot of these things that are going to be playing catch up. And certainly I would submit to people closer to the bottom than we are the top. And we are not going to require capital after we deliver this PEA because we raised a lot of money before we went public. And as I noted, we're going to have about $5 million in cash after that's complete.
Loaded up management team, the board, everything in this project is top quality. It's timing of the markets. People, the sentiment is so low. I mean, if we look back at that chart as well, 2008, when there was a spike up, or even 2011-ish around there's a spike up. Those are dramatically higher than what we are today. So even if someone was just to say, listen, if we just got back to one of those old peaks whenever there was issues in the market, that'd be great. So it shows that there's an inefficient market and people aren't really doing anything. But in those spaces, there are absolute gems. And I mean, that's Warren Buffett kind of says that he loves those markets that are inefficient, that are maybe not trading well, because in there you can find absolute gems. And we do have that. And pointing out E3 having some success shows that if there is good news and there's a winner and people can kind of see that, then they'll come back in, and we see that move in that stock very well. So for us, we know there's going to be news in LithiumBank this summer. It's just a matter of when that timing is, and it bodes very well not only for the province but for Canada as a resource country to be able to really shift along with the sentiment to this kind of green future.
You know, when you look at comparables and you look at how a team can deliver, we don't have to do a lot of heavy lifting. You know, a lot of that heavy lifting's already occurred. And when this really patient 4-year assembly of LithiumBank, of the team, these concessions, which are predominantly on Crown land, which are 100% controlled by LithiumBank, and to be at a point where you're going to deliver the first economic model with such a low share count and still going to have cash in the till, you know, I don't have to do much more than that. If people have ever purchased the junior mining shares and they understand share structure and they understand the torque that can be delivered in a team that's able to do it, and I think if you just look at the who's involved in the project, who are the majority shareholders, in the long run, this is always going to come out, and the real value proposition is going to be there, and is how much destruction has been there in the US dollar and currencies in general. To me, it's illogical that copper should trade at $3.75 a pound. And this is a good time to share that the chart, the long-term copper chart. And the point there is that even though there were moments of ebullience and extreme bullishness in copper in the last 20 years, if you're really critical and if you're honest with yourself, there were really only 4 periods in 20 years where it was really, you know, euphoria. Otherwise, you were always climbing a wall of worry. People, fabricators, the end user, they have no interest in paying high prices for any commodity, particularly for copper. So the copper price has rolled over in almost in a symbiotic sort of situation where you had this the closing down of many economic markets in China, and people maybe bought a little too much copper with the anticipation of inflation, and now people are buying less, obviously. Or you could even argue there are very few buyers, and you have people then, even the speculators, that are putting material back to the market, but it's not going to save the day. What we're talking about is weeks and months. You know, even though the copper price was high for that period of time, there was no major announcements of major copper mines being built. So that too will pass, and the long-term trend is, you know, higher for longer. And I think if you look at the pullbacks that happened every time copper had these big major swings higher, they had this major pullback, and then it continues because we are still short on the longer run for having long-term supplies of copper. So these fabricators can go hand to mouth for a short period of time, but not for a long period of time. So if their business is not going to be good for the next 1, 3, 7, 10 years, I don't believe that's the case, because everything is still moving towards this overwhelming transition to electrification, where copper, lithium, all these materials are going to benefit. And so the bigger macro picture is still is going to continue after all of this nervousness goes away.
I'm glad you brought that up, because it is. I kind of feel like we're in that the thick of it now. Like it's where the shift is happening, and it's kind of being forced now. Like we're doing it, and we're going through this kind of painful period. But that's the opportune time, because there's nothing. And I'm glad you brought up these kind of facts. There's nothing in the macro that's changed the outlook for your premise on copper and the electrification of the future, for our need for lithium. There isn't any indication that we're not going that direction. So there's nothing for people to go, oh, we're not going to do that. We're going to go back long-term and use coal. It's not going to happen. We're going in one direction. And right now there's that uncomfortable shifting period where people are kind of getting caught up with the story, because they may not know. They may not know how much we need of the mining sector. And then, of course, those of us in the know, we're waiting for this time period. The markets haven't pulled back because of a specific reason, because of lithium or copper, or more specifically, because of Faraday copper or because of LithiumBank. The outlook, the story is stronger than ever.
Yeah, well, there's a buyer strike right now, and that's not going to change. It's not changing tomorrow, not changing the next day. But there are two powerful emotions when you're talking about the stock market. Right now, it's fear. And fear is a long, painful, protracted process. But greed happens very quickly. And why does greed happen? Because there's opportunity. And when that happens, everyone's done this. We've all, however long you've been speculating or trading, there's an ABC company you followed for however long, and you understand the DNA of that stock, and it's lived for, maybe 5 or 10 years. And they always get to a point in times of extreme bearishness where they get to the ridiculous level where you say, it's interesting. I might want to buy that one, but you still hold off and you hold off. And when the tide changes and greed comes back into the equation, it happens very quickly. So I will submit to people that that's going to happen over the coming months. It's going to be a long, hot summer, and we'll monitor these volumes because the velocity of money. So we've had a few pulses now where the volumes did increase against big downdrafts. 2, 3, 4% down days, which is yet more phases of this capitulation where people finally dump their shares into really a no bid market. So you could see things really be red, really be negative because there are no buyers.
Yeah.
And the quicker that happens, this DNA of a stock, if a stock is now down 70%, well, there does come a time where a stock becomes cheap. LithiumBank, we raised our significant capital in August and September of 2021 at $1.50 a share. And still to this day, all of our peer group, their share prices are still up 3, 4, 5, 6x from where they were trading back in those days. And where we're 50% discount to that. So certainly we're closer to the bottom than we are the top. And this is fallen in sympathy on really almost negligible volumes.
And I like how you touched on the fact, like on the pricing sake, because if we look at a commodity and obviously if the copper price goes up, it's great. It helps. If the lithium price goes up, it's great. But there's also a happy medium where, like, even Elon Musk will say, listen, I'm not paying that in the market for lithium. So I'm going to need to go find myself a lithium producer, where it's like, obviously a mine wants to have the most amount of price it can get for its product. But at the same time, it also knows the market, the end user needs it at a reasonable amount. And that means that we need to have a supply that's easy to get to those users. So having projects in Alberta that can feed this lithium demand can help that price fluctuation and help battery makers and help really develop this next stage up, rather than if we keep the prices way too high. Sometimes that could be a negative.
Yeah, it's interesting. You have Koch Industries involved with the project in Arkansas. You've got Royal Dutch Shell involved, interested in direct lithium extraction or this briny lithium product. Imperial Oil, which is Exxon, coming in a meaningful way as a partner. And they're all working together. And that's not to count the countless technology, chemistry companies, battery companies that are working towards these large, long-term, modern supplies of lithium that can be put into battery-grade lithium for obviously lithium-ion batteries. And our project continues to be. The resource certainly is one of the largest contained inferred resources of any project anywhere in the world, and that was established last year with our maiden resource when we were a private company. So that was touched on in the press release we put out some weeks ago. And now the PEA that Hatch Engineering is completing for LithiumBank, which will come out in the summer of 2022. So that's positive. We believe is going to be a positive driver for the company. Now we go into comparables. Now we have an economic model. Now we can look. We can talk apples and apples, oranges and oranges. But the project, which is that one resource, or for that one project, is almost 2.5 times larger than the Clearwater resource for which is contemplated for the initial PEA that E3 put out, and it's significantly larger than a lot of our peer group. So that's certainly a suggestion that the PEA is going to be some kind of a larger project, certainly for not just for investors to contemplate, but for larger companies to contemplate. Because what does an oil major, what does a major energy company want? What does a major battery manufacturer want? They want a project that's going to have a project life of 30, 40, 50 years, very similar products, be very consistent, it's going to be very reliable. It's going to be in a jurisdiction where the rules aren't going to change. And certainly the workforce and the extractive industry knowledge that's in Alberta is second to none. And I said this before, the company only has 37 million shares out with 100% ownership control of these projects. Everything's going to be delivered, and we're still going to have around $5 million in cash. And that cash was raised at $1.50 a share. So what more can I say? I think there's some opportunity here. Markets are inefficient, and we're going to monitor the overall velocity of money. We're monitoring the peer group, and we were very, very happy to see that there was a positive reception when good news is delivered, and I think very productive news, because it's something that the market is looking for, and the market rewards you when you're able to deliver something like that.
So Lilac is having good success down in Argentina with that brine, but that bodes well because E3 is having great success 100 kilometers away in southern Alberta. So that also shows when you come out with your PA and you have these numbers that that there's a technique that's using that they're testing right now. They have some data on, and they're going through with it and getting recognized for it. That whenever you want to partner with someone, you have some options to partner with or to work with on the technology side.
Exactly, and I think that people have been. I've noticed that we've not delivered a lot of news since our IPO on April 1st, and part of that is the sequence of the work that's feeding into the PEA. But there is going to be a summer of news. There are other important characteristics and chemistries and porosities and things like that have to be understood and fed into such a PEA. And those can be looked upon within the market and on how technically successful those have been. And I think people should be looking forward to that. And more importantly, the technical people are looking for something like this. And all the work that's happening at those, it still is a very special type of mineral endowment. It doesn't happen in many places in the world. And this happens to be the Saudi Arabia of this type of these reservoirs with this briny water. And so we're very happy to be there and moving our projects forward. And I think all the work the successes that happen in the industry are the successes that benefit us. They already have at this point. So the hard work and the success that's been met by other companies is something that we're able to get the collateral sort of knowledge and benefit of. More importantly, our technical consultants are, and it gives them more confidence, with how we move our various measures forward.
The thing I like to tell people is that, yes, we're going through a very difficult time right now, and it's fine to acknowledge that. But if we can imagine what it looks like a couple of years down the road, that if you are passionate about this shift in energy and you want to be a part of this whole change, the satisfaction one would feel not only because they might get a great rate of return, but that they've kind of taken a big step forward, put their money where their mouth is, and kind of help to shift and change an economy, shift the face of energy. And especially if you're from Alberta, you're helping an entire industry shift more into the future and seeing that build. And like you said, it's a massive resource. And we're talking like Saudi Arabia style. And imagine the satisfaction that one could have to feel not only they've made some money, they've made some, but they've helped push technology and push the future forward.
A question that one has to ask oneself, has there been a bit of a short position put on the lithium sector? Goldman Sachs went negative on lithium.
Yes.
And how much of the rebound in E3 has been a part of it, maybe a short cover rally or short covering? Yeah. I don't know the answer to that. I'm just asking a question here.
That's interesting. Yeah.
And in the space in general, you look at some of the other peer group, and it's just noted from when we raised our capital in August, September of 2021, even though the space has been decimated, they're still up 5, 7, 8, 10x from where they were back then.
Yeah.
A 50% discount from back then.
And also, I mean, there's a lot of work going on at Faraday Copper right now. So there's going to be, I imagine, some news coming out this summer or fall, probably in there.
No longer a director of Faraday Copper, and for people would know that it was Copper Bank renamed to Faraday Copper, and it's been managed by this new CEO Paul Harbidge, and a blue ribbon, first class, sort of a big company mindset within a junior. And they raised $20 million about a month ago at 80 cents a share, no warrants, paid no fees, and stocks trading at a discount. A lot of stocks are, but they've got all the money, and I believe they have all the money they need to complete all the initiatives that they're working forward on Copper Creek. And the drilling continues. It's going to continue. They're working on a few different areas of the project, and they're working very hard towards a new economic model, sort of an updated preliminary economic assessment, which is going to come out sometime in early 2023. Great investors, very well supported. And that stock, I'd say, is very well consolidated at this point. It actually trades by appointment. There's no real volume anymore. And it too should trade with its peer group. And as far as I know, the models were always working around sort of 3.5, 375 copper. I don't think any company was really using 450 copper. Not required. Nice when it's there. And I believe, as I noted before, that's something that's practically inevitable. Otherwise, you're just not going to have any new copper mines. The copper prices stay here, and the fabricators are not able to buy hand to mouth forever. That's what's happening right now. And if people could picture these copper price movements, right now the speculators are assisting in pushing the price down. It's a negative trade. But when it goes the other way, which has already happened, and that's why you get these big bursts, all of a sudden they don't work in symbiotically with these fabricators, because now everyone is pushing it higher because they have no material. And that's when it just gets zany. And those are those little mini manias that happen. And that's where all the money is made, by owning Copper Junior shares.
Well, and I wanted to bring it up because it's kind of like your first child as far as companies go. It was your.
We do one at a time. We do one at a time, Andrew.
Yep.
That one, it's with good management. It's on its way. LithiumBank is the news story. IPO. We're going to work hard. News has got to get out. Okay, fine. The team got that done. Labor Day and beyond, it's going to be really amplified.
Excellent. Well, thanks so much for spending some time with us and catching us up with both those. But we look forward to seeing any of the data that comes out, and of course, any news release. But in the meantime, thanks for giving us an idea of the market, both in copper and lithium, and reminding us, what we're doing here, and to keep focused on the end of the prize, the game.
Exactly. Have a great Canada Day and July 4th for those who are watching in the United States, and we'll talk, as news comes out, which will be before Labor Day. Let's put it that way.
Excellent. Well, thanks so much again. Take care.
Okay, thank you.